Good afternoon, everybody. Welcome to Trader Merlin Show for your Wednesday edition. Another Jerome Powell market moving kind of day. Yes, I'm glad you guys liked that graphic. I was kind of enjoying it as I put it together. And I didn't create the Superman image, but you know, on a day like today where Jerome Powell was speaking, and it wasn't really like an FOMC speech. I see options merchants saying, it wasn't an FOMC speech, but it was certainly Jerome Powell speaking. And I think, anytime we wrap up the show, I like to put a picture of the economic calendar there so we can see what's happening. And we all knew he was going to speak today. And I'll be honest, I really thought that what he said was no surprise whatsoever. It was the flock's doing good, Randy. If you watched through his comments, and by the way, if you didn't watch it and you are someone who's very interested in this stuff as I am, I'm going to put a link in the chat here, which I would encourage you to watch this later. This is Jerome Powell's speech today in a meeting that he was giving, basically economic outlook with Jerome Powell, and he said a lot of stuff that is totally in line. He cited a lot of economic data that said inflation is still relatively significantly higher than they anticipate. He mentioned that core PCE price index running around 5%. He said that the inflation is moving stubbornly sideways, which is kind of funny because it's not moving sideways. It's in the short term moving down, but the long term it's got a much bigger steep up move. So I would disagree with that. He also mentioned that he said ongoing hikes are appropriate. And this is where the market's absolute gangbusters is basically the talk track was we're going to move back to 50 basis points. And was that any surprise to anybody here? We've been looking at the FOMC Fed Fund futures, which here I'll show you that chart again. And yesterday it was 66% chance we're going to see a 50 basis point increase. Well, now it's 77. So the odds are that we're going to see a 50 basis point increase anyway in the Fed Funds futures, not 75. And the market just absolutely took off today. Let me show you some of the end of day numbers. I'm sure you were all watching it anyway, but this is where I'll take the opportunity to show you the superhero Jerome Powell saving the day for anybody who was long in this marketplace. I lost today, but luckily I was hedged from some of my positions, so the losses weren't as significant as they could have been. So let's start at the bottom, work our way up. Here's gold, 1.07%, and you notice this monstrosity of a candle basically erasing this is the monthly. I'll show you the monthly totals here in just a second. There's the candle I was looking at. I knew we were back to the highs. Here is your gold chart, which came ripping back to those highs we achieved about 2.5 weeks ago. On November 15th, we reached a high on gold of 1791, and here we are now at 1782, about to challenge that level yet again. A nice move up, and it was only 1.08% gain today for gold. Now, the index is where things really start to get interesting. I've mentioned several times on how the Dow has been the strongest in this past couple of months of trading. What's his kryptonite? Ooh, boss, that's a great question. What is Jerome Powell's kryptonite? I mean, I guess the graphic is just perfect for that. If he's Superman and he keeps on propping this market up, what would his kryptonite be? His kryptonite, in my opinion, actually, I'll let you guys type in. If you had to say, this is the kryptonite for Jerome Powell, what do you think it would be? I'll leave that one hanging so you guys can type that in the chat. I'm curious. We'll get a bunch of different answers. There's obviously a lot of things facing Jerome Powell that could be deemed as kryptonite. Some of you might be putting down inflation. Some of you might be putting job growth. Some of you might be putting the value of the U.S. dollar. I think all of it would suffice as kryptonite. But for me, there's one that I think is worse than all of those. And again, I'm waiting for you guys to type in answers here. But for me, it would be stagflation, which is declining growth, which we've seen growth all of a sudden start to tick back up. You see declining growth, but right now it's actually moving up. You have inflation really high, which we have, and you have unemployment numbers starting to rise, which we started to see a slight increase. So right now, stagflation isn't the issue. But I think if we get there, then we will start to see him really backed into a very troublesome spot. Right now, because inflation is starting to slow down and Jerome Powell has been raising rates aggressively and not having an overly big impact on the equity markets, I think he's okay at this point. But if we start to see some of these numbers change, and again, time will tell what those numbers end up looking like, then I think that could be bad for him. What do you got, fear? Nah, Jerome Powell, he's not fearful. He doesn't care. He's got a job and he's making huge money. If these markets implode and collapse, he's still getting paid, so I don't think he's worried about it. MMT says job increases. Yeah, I guess right now he says that for everyone looking for a job, and this is per the press conference he said today, or per the presentation he gave today, he said for everyone looking for a job, there's 1.7 jobs available. That's a pretty incredible statistic, but who knows if I even trust that data. If we start to see more and more people taking jobs and we get full employment, well, that could potentially hurt inflation again, right? More people earning, more demand, and that could be a problem down the road. But I don't think he's so worried about that. I mean, we're at 50-year lows on unemployment numbers. I think for him, inflation is the bigger worry. I would put inflation as a big kryptonite factor. And if we take a combination of events, I would say that stagflation would probably be the biggest fear that Jerome Powell had. Oh, Jerome Powell is the fear? Is he? Or is he the knight in shining armor? I mean, look, many people might view Jerome Powell as fear right now, but if you take a step back and look at what's happened since 2009, Jerome Powell and Janet Yellen have juiced this market and given everybody amazing returns. Your portfolios, your 401ks are looking awesome right now, and you can't be upset about that. But all good things come to an end at some point, and the ultimate question is, how much is the market going to give back of those gains? And we'll just have to wait and see. Made an inside day into an outside day a la Powell. Yes, it was a very narrow, quiet day. But I think people kind of expected that. They were waiting for Jerome Powell. So as you saw early on, not a lot of big moves in the market. And then when he spoke, it went crazy. So Tomasina says losing his job. You know what? I actually have to say I would disagree with that. Only reason is I'm sure he is can you imagine how stressed out he is at all these press conferences and every single word he says is scrutinized? But when he's done, when he loses his job, what's he going to do? He'll go to a less public position, possibly, make great money, and then just go on a book tour, get paid, a couple $100,000 to go speak at Goldman Sachs and Merrill Lynch and JP Morgan. And then it's the gravy train. Write a couple of books on the markets. Honestly, I bet you Jerome Powell's going, fire me, dude. I'm done with this stuff. I don't want to do it anymore. All right, let me continue on with our top 7 markets. So we go from the Dow, which is up 2.25%, and to me, it's been the strongest, and it actually broke through this overhead supply, which it did a couple days ago, but retraced quickly and now just knifed right through it. The question now is where we headed with the Dow. The clear, obvious answer looks to be about 35,200 for the Dow futures here. Crude oil also showing a nice little pop, although I don't think that this is out of the woods. It says 2.93% gain, at $2.29 per barrel. But you notice where we headed. We're right into this small area, which would be deemed an area of supply. Tiptoed into that one today. I'm looking at the bigger picture, and for me, I'm looking at crude oil as maybe a point here in the near future where I might be thinking about shorting it, although I say that almost hypocritically because I am long XLE right now, but if I get some big pops up here in crude oil, I may think about going short because I do think the powerful trend here is to the downside on crude oil, but playing short-term bounce on XLE with some call options and selling some puts on it as well. Yep, Liz, going on that speaking circuit. I mean, wouldn't you guys like to get paid, I don't know, $50,000 at a minimum? Most likely a couple $100,000 to go speak for some big investment bank firm and speak for an hour or two, shake a couple of hands, and just walk away with that kind of money. Man, must be nice to have that kind of gig. Moving on up, Russell 2000, 3.21%. Here's where we get to some big numbers. The Russell was kind of concerning to me in its weakness over the past couple of days, but today we've erased 2 weeks of losses. And that should put into perspective the influence that Jerome Powell has. 2 weeks of losses in the Russell have been erased in one candle. 3.21% gain today, ripping pretty much up to 1,900 on that, which is the logical spot for it to run to. But I'm kind of looking at this overhead piece. I got this little yellow box here. Let me stretch that out. Let me actually draw it to where I would be more inclined to put it. Right about there. So you're looking at about 1939. So it seems to me like we got about another 40 points to rally up here in S&P before we get to the next significant supply zone, and then obviously you're looking at 2025. But great day for the Russell. S&P also taking off and ripping through those highs we've seen for the last 2 weeks. Here we are again coming back towards those numbers right around 4140 will be the next target here, which is about 50 points away. So looking good for some running room here for the equity indexes, although I will tell you my thoughts in just a minute. And NASDAQ, this is the one that hurt me the most today, 4.79% pop to the upside. Thank you, Apple, which did an about face after the comments I made yesterday, and we'll talk about that here in just a minute. But we are coming back into that supply zone. Now, we've had this one mapped out. Now, granted, anybody here who's a student of Core Strategy at Online Trading Academy, you know that this supply zone is losing a lot of strength, right? It's been retested twice. This is the third time it's retesting that overhead supply zone, so not feeling very confident about this current zone that we're into. However, it is going into one, and we'll talk about my hypothesis going forward. And best performer out there, hallelujah, Bitcoin. Thank goodness. 5.2% move for Bitcoin on the day, up to 17,110. And before I dive any deeper into the markets for today, I do want to walk through what happened for the month of November. So today's activity saved the month of November. Like, month of November was down. We were looking at a negative % rate of return for most of these market indexes. And it's almost like collectively the institution said, hey, hold on a second. Is this the last day of November? It is? All right, well, let's jack it up and let's take this market soaring. Here is the month over month numbers from the closing of October to where we are today. Boom, looking fantastic. So I'm starting at the top. Normally I start at the bottom and work my way up, but I've been late today. Gold was your best performer for the month, 8.49%. And for those who would like to have a sing-along here, I will bring up the charts with the numbers. So here is 8.49% for gold. There's the chart right there. And notice we have pretty much erased almost 3 months of downside movement in 1 month on gold. Kind of bummed that I got out of my long gold. I was in GLD long, but made some nice profit on that. But can't complain there. Next one on our list, number 2 for the month of November. Well, let's talk about oil. Interestingly enough, the top 2 there are commodities, and well, convenient because you have falling dollar prices. Now, before I show you that gold chart or the oil chart, here's the dollar index. You guys wonder why we saw nice moves this month. Look at the down move on the dollar index, and from the previous close to where we closed today, about 5% slide for the US dollar as a whole. That is a gigantic move to the south side, and that's why you're seeing these commodities do so well. So here is crude oil chart. No, hold on a second. I'm mistaken here. How did I get that number wrong? So I'm wrong. How come every time I do this for you guys, I end up being wrong? Crude oil was actually down 7%. Okay, so I got it wrong. Crude oil is your worst performer. My bad. I'll keep going to the list. I typed the number there, but I forgot to change the symbol to a minus. The beauty of doing these things last minute. So let me just make that. There we go. That now corrected the chart for you. All right, so let's go. Dow Jones was 5.72. Here is your Dow for the month. Looking great. And again, going through that yellow box you see there at the top. Question now is, do we get back and start challenging these all-time highs on those 30 components of the Dow? Looking great going forward, 5.72. Next on our list is going to be the NASDAQ 100, which is up 5.58% on the month. Here is your NASDAQ 100, which rallied right up into some supply zones. Now, this one's definitely a lot, very different from what I saw with the Dow Jones Industrial Average. Right? Obviously, you have this NASDAQ monthly chart that's just jaw-droppingly powerful to right here, and then all of a sudden we get our pullback. Now, there's all kinds of speculation as to where this may pull back into. Personally, I feel like we're on a bigger picture, more continued downtrend here, based off some of the stuff facing technology and the show I did talking about Apple and the China and Foxconn and all that stuff and the battle with Twitter. I think that there are some headwinds for the markets going forward. And even though Jerome Powell's comments today may have painted a slightly better picture for the economy, I think it was pretty clear there. He says, we're not out of the woods yet. We must, there were some words I wrote down here. Damn it. I gotta remember where my talk track was. He really made it clear that they're going to continue raising rates. They're not going to stop raising rates. They will continue. And he said, history has taught us that premature loosening of policy is a very bad thing to do. So he wants to keep on tightening it up, making sure that the rates get higher and higher to accommodate or to fight inflation. So, 50 basis points, no big deal. Markets expected that. So I do think that's going to add pressure to the south side here for the NASDAQ. But for the month, 5.58% pop to the upside, looking great. Next on our list is S&P, which is 5.56. Not a very different picture. Here is the S&P 500. So you guys can see that one. All in all, very similar to what we saw with the NASDAQ, which has been just tremendous boom and a bit of a pullback here. Now, as far as how much we are off the peak for the S&P, we were down at one point 27%. As of today, we're down about 15%, which if we look at the forecast that I gave for the year, I believe my forecast was we're going to go down over 20% and end up the year down 15%. So I wish we would just end today so I could, I wish we could end today so I would be spot on with my call, but we still have a full month to go. All right, last two on our list. It's going to be Russell 2000. the ARZ Russell was only up 2.2%. So it looked like it was doing so well, but just really didn't have the strong finish to November that the other indexes have. And from the futures perspective, I guess I could use IWM. Bring up IWM. No, similar picture, big pullback. I actually thought we'd go a little bit lower. There's a better monthly demand zone down around 150 on the IWM, so I kind of thought we would drift lower, but we didn't. Bottomed out around 163. But all in all, it looks to me, I guess you have to put yourself in the camp of, are you going to put you in the camp of, I'm part of this big uptrend and this is just a pullback, or are you putting yourself in the camp of, this is a pullback which is now going to turn into a trend to the downside? And that's the decision all of you have to make. I'm on the fence right now. This is why I'm kind of hedged myself a little bit with my positions, because I'm not fully confident that we're going up or down at this point. My gut says we're going down, but don't fight the Fed. And if the Fed becomes accommodative, I think we'll all be in trouble. And lastly, the worst performer out there, no surprise, for the month of November, cryptocurrencies and digital assets. Thank you, Sam Bakeman-Fraud, for your wonderful contributions to this slide. 16.36% slide for Bitcoin. And there's your monthly chart. I'll take these lines off here. I guess they just don't serve much of a purpose anymore. Not looking so good. And I do have two levels that are drawn here, right around 13,735 and 10,430 are the next two major stopping points I see for Bitcoin. So a little bit nerve-wracking there when you look at the price chart of Bitcoin, but ultimately it is what it is. Just got to let it play its course, and hopefully we'll get some stability underneath this market here in the near future. So, where does the downtrend end? Though, what price? On which asset here, Chris? There's a lot of different ways to skin this one. I personally, my favorite chart to start with, I know some people don't agree with this, and that's okay, is I love to look at the daily. Right? The daily just tells me that we're just finding new lows. We kind of consolidate and we drop. And now we feel like, fortunately for anybody who's in Bitcoin, the consolidation has been pretty tight for the past 2 weeks, barring that big sell-off we saw the first week in November. And now you see a little bit of a pop to the upside. I don't think that we're going to see huge moves to the upside in crypto anytime soon. But some of you, okay, I'll check the S&P in just a second. But some of you may have read that Brazil basically said, you can now use cryptocurrency as payments in Brazil. That's a huge step. Now, they didn't make it their currency, but they said, you can use it for purchases, which is a big stride. They also said that any exchanges that are doing business with cryptocurrencies must separate customer funds from company funds, but the problem was with Celsius and Voyager and BlockFi and FTX have all been doing shady crap. Funds need to be separate, and unfortunately for the U.S., people got burned on that, including myself. But now Brazil, huge step, and that's, from an adoption perspective, the more countries like Brazil, who are not, banana republics, these are like major economies, that it does really paint a positive picture for the ecosystem going forward. So there you go. Before I forget, I'm going to repeat, but it just popped into my head. I don't know why. 2 announcements I should have done at the top of the program. Announcement number 1 is Ryan is still sick, so I'm not going to do the trade plan show tomorrow. So we'll do something else tomorrow and get Ryan on next week. And then Friday, I've got a no-show again. I'll be teaching over at UCI with Larry Jacobson for the master's program over there. So always thrilling and fun to work with Larry Jacobson. And so no show on Friday. All right, one minor addition here, because I know some of you are probably taking screenshots and love to look at this stuff. So I'm going to do this, and I'm going to pull this one down here. And now we have the actual list. So here is your list of markets for the month of November, fixed to accommodate for my little error there on oil. But there you have it from top to bottom, Bitcoin all the way up to gold. And interesting enough, seeing gold take that top spot. All right, so there I have my run through, a little bit of a market overview. And then what does Tom say here? Tom says, Bitcoin still looks great on an all-time logarithmic scale considering the halving cycle. Yes, and this is something that we talk about in the CIL, is the halving cycle, and what does that mean? How does that impact Bitcoin and just the crypto markets in general? And the halving cycle will be repeated here in the near future. We're going to see a halving come sometime soon. Wasn't today December due to was it today? I thought it was December 2nd, if I'm not mistaken. I'm not sure. I'll tell you what, this guy, man, I have a hard time. See, if you look at the two guys who are the scapegoats for fraud in crypto, it's Do Kwon of Terra Luna, who is in hiding. He says he's not, but he won't tell anybody where he's at. And my guess is he's in a non-extradition company hiding. I would not go out in public. If I cost people $40+ billion worth of losses, I'm probably getting facial reconstructive surgery so people won't recognize me, because I'll tell you what, people have been killed for a lot more or for a lot less than $1 billion, right? If you rob someone for a few $100,000, you might end up taking a dirt nap. Watching Sam Bankman-Fried just walk around the streets of the Bahamas like nothing's going on, yet you cost billions of dollars of losses to people, boy, I would be in hiding. There's no way I'd be giving press conferences or let anybody know where I was. So it'll be interesting. I would not be surprised if something, what's the right term, just something horrible were to happen to Sam Bankman-Fried because of his publicness. Anyway, he's supposed to speak today. I agree, he should be in jail. Absolutely. That's pretty funny, Gretchen. Well, I'm glad I fixed it, because I hate having bad data up there. But I was running errands today and didn't get a chance to get. For some reason, short-term memory, I forgot to make that a negative number. All right, let's see. What did I have else for today? So as we look at what's going on in that broad market, obviously Jerome Powell saved the day with his comments, but as I showed you, really nothing has changed. I mean, here's your FOMC. This is not like a drastic about face in the rate announcements. This was purely expected. So what I think is going to happen here, and again, this is just a hypothesis, I could be completely wrong, is I feel like this is a fake bull or a bear trap. Bull trap, excuse me. Markets have been slowly drifting down, looking weaker. The economic data is not getting that much better, and I'm going to show you the data that came out today. But to have a market rally almost 5% for technology, given what's going on in China, given what's going on in the U.S. with some of the firms battling each other, it seems to me like this is a bull trap. Get people to think, yeah, here we go. Jerome Powell saving the day. Boom, they buy. I'll be looking for potential short opportunities here. I know I'm going counter trend. I know some of you are very bullish, and that's okay. But I'm just letting you know what I'm doing with my cash, and we'll see what happens in the long run. Now, I'm not loading the boat. Again, I have put options, and I'm long the underlying on some, and I'm actually hedging with options on the other. So today my biggest loss was on SPY, because I have 40 puts on SPY and 30 on QQQ, but I also have QQQs long, and I'm hedged there. So Merlin ends by close to closing an old abandoned baby. Oh, you're bringing up the candlestick, the abandoned babies. SPY, you say. I'm not daily. So you have this abandoned baby. That's an interesting one. So some might call this an island reversal. And what you're referring to is this guy back here. On Monday, the 12th of September, you have this gap up and the next day gap down. So this could be considered island reversal. Some will call it an abandoned baby. I think that one is pretty good. No, Larry, I don't know about what's going on with Larry's XLT, but Friday's session, I will be at UCI. So Thursday, I'm doing a show tomorrow, but Friday, I will be at UCI. So when you have an unfilled gap like this, yeah, those do become magnets to price, and it pretty much filled it today. You've got a little bit more room, which is why I do think you'll see a little bit more upside tomorrow. The question is just how far do we go, right? How much does this momentum really ride? I'm guessing that we'll probably see a gap up tomorrow very slightly, and if it doesn't have good momentum tomorrow, if it traverses sideways and starts to dip a little bit, then I might be doing much more intraday day trading, building some bigger positions short, because on a day where you have a huge green candle like this, typically if it doesn't rally strong the next day, it's going to hesitate and roll over. Kind of like, look back here on October 13th. You guys see that gigantic green candle? And it gapped up the next day and then rolled over. That could very well happen here again, but again, I'm not going to jump in there. I want to make sure that I wait and see what the market gives me, as opposed to I'm not going out there and buying a bunch of short futures right now. I want to make sure I wait for the market to tell me what to do tomorrow morning. So we'll have to wait and see how that one performs. But yes, that abandoned baby island reversal pattern here, certainly a magnet towards price. Now, some of you might be looking at these lower levels saying we got big gaps that need to fill. Well, that could also be the case. We could always make arguments for both sides of this. Now, when you look at SPY, the reason you see those, and a lot of people like to look at the futures, when you look at an ETF like SPY, you're going to see a lot more gaps. And based off what we see in the futures market, those gaps get erased. So I do like to look at multiple perspectives, because you don't have that island reversal on the futures chart, but you do have it on the ETF. So I like to look at both of those. All indices moved approximately two times daily ETR. Yeah, which should make you a little bit nervous, right? Look, if Jerome Powell said, hey, we're going to go to 25 basis points, I understand the rally. That makes sense, because that really is clearly saying that the Fed is pulling back. But basically he said, we're going to 50 basis points. which we already knew. It was already priced in, which just makes me a little bit wary about the economic data. Now, he did give some foreshadowing. He talked a lot about jobs. So that link I posted there, again, I'm actually going to re-listen to it and just take notes. I didn't have time to take notes, but I love writing down the numbers that he says so I can have those stats in my head and kind of plan out my attack going forward based off his numbers and stats that he's looking at. He kept citing core PCE, and then it was funny because he later said, but to look at inflation without food and energy, that doesn't really make sense. Like, then why are you looking at core PCE? If you take out food and energy, things look very different. The average consumer can't take food and energy costs out of their lives. It's not like I can just go, you know what, no food and energy for the next month because it rose too much. Kind of nuts to me. All right, let's look at the economic data that came out today. So here is the final announcements for the week. I cherry-picked this, so I cut most of it off. You can see here we have the euro stuff at the top, which was slightly better than expected on the inflation front for the euro, just slightly better. Really, the important stuff was down here near the bottom. So our preliminary GDP numbers were actually better than before. They were expecting it to jump from 2.6 to 2.8. Remember, we have the advanced number was 2.6, which came out a month ago, and they thought that maybe the data would paint a rosier picture up to 2.8. Came out at 2.9. Which is part of the reason I think the markets are very happy. However, they didn't react to that. They were still waiting on Jerome Powell, I believe. You also have down near the bottom, pending home sales. That actually got a little bit better. We saw a significant decline in home sales. Thanks, Jeff. Glad you liked that one. Crude oil inventory showing a huge drawdown, which may be part of the reason why we saw oil up almost 3% today. And just a lot of big economic announcements. Of course, there's that Jerome Powell, and I'll tell you about the economic calendar for tomorrow. Now, on the earnings side of things, there really wasn't anything today earnings-wise. There was Salesforce CRM, which had big earnings beat, and then all of a sudden just didn't have a good market return. So the economic data today somewhat supporting Jerome Powell's argument. But again, we can't look at one point data. You have to look at the string of it all and how does it all tie together. So let me see if I can bring this one up for you and show you the data for today. So bear with me as I bring up some Forex information. Here's from forexfactory.com. ADP non-farm employment change, right? So he talked about 1.7 jobs per person that's looking for work right now. But notice the non-farm employment change. It dropped significantly. Now, obviously, let's get out from the pandemic low. We're seeing less and less jobs. Non-farm employment change is beginning lower and lower and lower. So that's not really a great thing, especially given the fact there's a lot of people that still are unemployed. The other data here that I thought was interesting is this one. Right? We talk about GDP. Now, this is the number here looking quarter over quarter. And once we take out the pandemic swings, this is definitely a nice about face. Those two lower bars here below zero for the months of May or the quarters of May and August, that's what officially made us a quote-unquote recession, because here you are with two consecutive quarters of negative GDP. However, this 2.9, very robust, and I'm curious whether the next reading, which happens next month, will continue that trend of showing stronger GDP, which, of course, the higher GDP gets, the more loose Jerome Powell and the Fed can be. Now, the other numbers here, I think that was the only one I wanted to look at. Oh, there was some housing data. All right. Oh, the pending home sales. So this one I think is pretty important because if you look at once the pandemic swings move out, and so basically what I'm doing is getting into the tail end of 2020 to get those giant fluctuations out. Notice it's been pretty gloomy with regards to pending home sales. We're seeing fewer and fewer, although this month we had a nice tick up, but it's only 1 point data. If I look at the bigger picture here, it looks like that trend is actually getting worse, not better. So this pending home sales data today didn't really get me too excited. Still looks rather negative out there. Okay, that was my main talk track for today. Let me see here real quick. Our UCI Business School alum, welcome to heckle you and Larry. Is it Navarro's class? Yeah. Man, old Peter Navarro's class. No, actually, this is a class that Larry teaches at UCI, and I'm coming in as a guest of Larry's to talk about innovative teams. I'm going to talk about some digital assets and kind of, it'll be a fun presentation. So no, you can't make it in there, Tom. Can't come in and heckle us. This is just for the students, but yeah, it's nice to go and teach at university. I'm a big fan of going and teaching and at least knowing that I've got potentially the future of the financial markets and maybe seeing things from a slightly different perspective, because I know how swayed my professors were. It was interesting hearing my finance professor teach a class on trading and investing, and he didn't really trade. It's like, okay, so you read a book? Awesome, dude. Glad you're getting a 6-figure salary and you're tenured and teaching us a bunch of garbage that really doesn't work. So I like to go in there and actually show the good stuff. And it says, I think we're going to have a gap low in CPI coming bad tomorrow. You know, it's pretty speculative on what's going to happen out there tomorrow. Now, when you look at the U.S. markets, you're not getting, well, I'll show you all that data here in a second, but CPI numbers aren't coming out tomorrow for the U.S., but in the near future, we are getting some CPI numbers. Remember, the Fed has made it very clear. They're looking at core PCE price index, not necessarily CPI. To me, you got to look at both of those. So you have to look at CPI and PPI together and see how one might impact the next. But the Fed's made it clear they're looking at core PCE price index. Liz, I presume Jerome Powell already knew PCE numbers for tomorrow when he spoke, so I assume they will show a reduction in inflation. Would it be fair to say we therefore won't see much move on that tomorrow? Well, here's the calendar for tomorrow. I was going to get to this later. But if you look here for the U.S., you got core PCE happening an hour before the market opens. They are already forecasting. You can see it right here. They're already forecasting it to drop from 0.5% to 0.3%. Jerome Powell pretty much said the same thing at his meeting. So any surprise from that? Like if we came out at 0.2 or 0.1, yeah, markets are going to rock up tomorrow. If we come in line with expectations, I still think we're going to gap up tomorrow. If it comes out anything higher than 0.3, like 0.4, 0.5, 0.6, etc., then I think the market might have a little bit of a sell-off. But coming in line with expectations or lower, markets are going to rally tomorrow. Now, the extent of that rally is to be determined. I'm kind of hoping we come out at 0.3% on the core PCE price index numbers. I'm hoping we get a market gap up into that overhead supply level on some of these indexes and then hesitate. When that happens, then I'll start buying some. I'll be going, whether I'm going short on futures or maybe even using some of the triple leverage intraday ETFs for short-term trading if I have time tomorrow, because I'll be teaching class, my cryptocurrency class in the morning. But I'll be looking for potential short moves here. I'm not going to get into the long side of things on this one just because I think that it's somewhat unjustified, at least from my perspective, for tomorrow. I don't think markets are out of the woods either. A lot of dollars demand and push through. Yep. Just because we've had that little pullback there in the dollar index, which let me show you that one again. You've got this Dixie having sold off pretty significantly for the month of November. This actually does look like it's going to keep on drifting down just based off the chart patterns. But again, they're unwinding their balance sheet. They are taking money out of circulation, removing it. So we've got fewer dollars in circulation, and then I've got yields. Here, let's go to our 10-year. Right? Yields are declining, but there's still a higher yield than you can get with most other countries. So there still is that consumption of the dollar or conversion of foreign currencies. They're buying dollars so they can buy bonds and get this yield. And also notice where the dollar is at right now, or the 10-year. The 10-year is at demand, right around 3.6. So if it's going to bounce, this is the spot where it's going to bounce. So really a lot of factors out there hinging on this inflation data and what the Fed does in a couple of weeks here at that FOMC meeting. All right. I just in, are you more bullish after today? No, I'm not. I'm not more bullish after today. I'm actually thinking this is a great opportunity for me personally to potentially get a bigger short position, but I'm not. I haven't closed out my QQQ. I'll keep that one open. I'll probably let that go through option expiration. I have some calls against my position at 295 on the Qs, so just so you guys can see that. So here's the I sold calls. So I've been long QQQ for a while, and I sold 295 calls. So if I get the 295 taken away from me, I'll still make another, $110 per, $110 per share. I've got 200 shares, so that also be another $2,200. And then anything above 295 gets taken away after December 14th. So, it looks great when you look at this picture. It really does look good. However, that 295 mark was where we dropped aggressively, hesitated, and then continued on. So I'm looking at that as being my target for supply. But no, I'm still bearish for the next few months. But that's just my perspective. Don't go out there and start loading the boat short just because I'm going short. Do your own due diligence. Have your own plan. I could be completely wrong, and I'm sure if I am wrong, then several of you will point it out and rub my nose in a little bit, which is fine. I deserve it. It's fine. Let's go. Will this help give us a Santa rally? Well, I think the misconception there is that the Santa Claus rally is the entire month of December, right? A lot of people believe, it's the whole month. It's not. Statistically, it's the last 5 days of the year and the first 2 of January. That's the Santa Claus rally that statistically is the best performing market sliver of time. So that doesn't mean that December 1st, we just all of a sudden out the gates have a big rally. Not exactly sure. I'm going to throw myself in the odds category. The odds are we're going to have a Santa Claus rally, just because historically we do. Now, what that means is the last week and first two of next year, or last week of the year and first 2 days of next year, go long something. Go long the broader indexes. You'll probably get a 1% rate of return. Now, it may not seem like much because, you look at a market today that's up 4%, almost 5%. You're like, well, wait a minute. If the average historical rate of return for that last 5 days of the year and the first two is only like 1%, well, what's the point? Yeah, well, that it's a fairly high probability of making 1% over a 7-day window of time. That's right, Drew. We all got our own opinions. It's fun to share. I think the most important part here is if you have a difference of opinion, you don't spit on somebody for having the opposite opinion. I don't care. If everybody in this room was the most bullish that you could possibly be on the planet and I was bearish, I would have no problem with that. Great. It's your money. You need to do what you want with your money. I'm going to do what I want with my money, and I'm hoping that I'm right. I believe that I have a strategy in place. I'm trying to read these markets from a technical and fundamental perspective, and if I'm wrong, I'm not going to take big losses. That's the key. I'm happy to be wrong. I have no problem, and I share it to you when I'm wrong. I'm wrong quite regularly. It's fine. As long as I don't take big losses over the course of time, I'll be doing fine. All right, let me go to this question that came in from John yesterday just so I can get to it. And by the way, I did mention that I was going to do a cannabis show today. I didn't have time to do that, so I'll make that the show for tomorrow. So sorry for those of you who are looking for a weed show today. You got your bong out there and you're rolling up a big blunt to smoke on the show. Sorry, I'm going to have to do that one tomorrow. This is the question I got from John. Which cold storage device do you recommend? I just have Bitcoin and Ethereum. Well, look, there's several of them out there. And if you're looking for a place to keep your crypto safe, at this point, we should all be scared to keep our crypto on any exchange. I use the Ledger, the Nano Ledger. You can use the Trezor. If you don't want to spend money for a physical, cold storage device like this, there's several other ones out there you can use. The only one that I have used in the past that I think is pretty secure and seems to get very high reviews, haven't heard about it being hacked or anything like that, is Exodus. So there's an Exodus wallet that you can use to store your crypto if you don't want to buy one. It's an app. You can use the app. You can download the software on your computer and do it that way. But that, again, is on your computer. So should your computer get hacked, should your, someone get in there and get your private keys that are on your computer maybe, then you could lose your crypto. So I like to have a disconnected external device. If you are buying anything like this, a Ledger or a Trezor, there's one called a KeepKey. There's a few others. Make sure that you buy it from the original vendor. Don't buy it at any secondhand store. Don't buy it at any even retailer that's not the original one. I wouldn't even go to Best Buy to buy a Ledger. I would really make sure you buy this from ledger.com only, or if you go to Trezor, make sure it's Trezor's home site, etc. Just because my skepticalness and my fear that everybody's trying to steal from me just tells me to buy them from the original source. Yeah, Option says position size is extremely important. Absolutely. And this is where we can have a wide variety of different opinions as well. Some of you may think, like Warren Buffett, if I'm going in on a trade, I'm going all in right now. Warren Buffett's like, if I'm going to buy one share, I may as well buy the whole company. I'm more of a scale in type of person. So I don't know if I'm right when I first make the trade. I just don't know. Obviously, I hope I'm right. I have the plan in place. I've done the analysis, but I could be wrong. So I'll start off with a good amount. Do I have the defined risk? And if things start to move in my favor and the trade really starts to pan out, I'll start scaling in and build a much bigger position. But that's just the way I like to do it. Some people want to do it a different way. Do those wallets accept cryptos other than Ethereum? Yeah. Sure, John. There's so many different cryptos out there, right? There's over 21,000. If you Yep, it'll take all ETH. So like this wallet here, we'll take Ethereum and any ERC20 token. It'll take a BSC20 tokens and BIP20 protocols. So again, if you have obscure tokens, I would definitely look at. I would definitely go and look at what tokens they carry, which ones they support. So Zed says Nano Ledger, is that different from Ledger X of FTX? So no. So I believe that FTX made an investment in Ledger X, which is Ledger's technology, but they don't have any, they're not part of the company. They just invested in it to help that company grow. They're not looking at technology or anything like that. I actually watched an interview with the CEO of Ledger. To make that very clear, he's like, no, it was an investment by them. They don't own the company. They don't own Ledger. They don't own these devices, which Zed is a good point. Like if I knew FTX was in bed with Ledger, I may move my money elsewhere. I'm doing my best to get away from anything touching FTX. I think it's just crazy. Good question, John. How about MetaMask? So MetaMask is a non-custodial wallet that you do have your private keys. However, it is a bit more vulnerable, right? Because it's web-based, there is a bit more vulnerability to potential attacks or hacking. I have not had any issues personally with MetaMask. For someone who's not very technically savvy, it may be complicated, especially if you have different networks and coins, right? It's designed as an Ethereum wallet. So if you have Ethereum, great. But if you have Bitcoin, you're like, oh, well, wait a minute, it may not work with that. Well, it will work with Bitcoin, but other cryptos, it may not work with. So like if you're using things from the Binance Smart Chain or Solana, you may not be able to use it. So if it's Binance, you have to do special tasks to allow it to do that. I personally would think that this is a better way to go. It's $100, peace of mind. I control everything on it, and I much rather go with the Ledger or Trezor. Oh, thanks, Gretchen. Appreciate that as well. Let's see. I appreciate you being real with everything. I just keep an eye on the price action. Like, yep. And again, one thing that you have to be comfortable with is being wrong. It's easy to beat yourself up over trades, especially if you have a bad losing trade and you lose a few grand here, a few grand there. It's easy to beat yourself up, but don't be worried about being wrong. It's going to happen to all of us, and sometimes it happens in streaks where you feel like you can't do anything right. Well, if that's the case, you take a break. Take some time away from trading for a little bit just to regroup and then get back in there. GD, some Merlin, I hear something about BlackRock losing some money with FTX, so are these big funds already quietly playing with crypto? Yes. Oh, yeah, of course. Of course. I didn't see the report specifically about BlackRock and FTX, but yes. Look, Sam Bankman-Fried, at this point I'm hating the guy, but boy, he was a brilliant guy. He was having such incredible rates of return and growing so quickly that any investment firm out there was buying into them and giving them, not any, but a lot of them were giving them money, especially VCs, right? When you look at an investment, all of a sudden you're getting 10x, 30x, 50x rates of return in a few months. You kind of turn a blind eye to the bad stuff. You're like, hey, you know what? I know you're doing fraudulent crap over there. I know you're ripping people off, but as long as you're making me 10% a day or whatever the rate of return is, turning a blind eye. Now, some of these firms are starting to get caught, and hopefully they don't have too big of exposure. In the case of something like BlackRock, if BlackRock lost $500 million, is it really going to hurt BlackRock? Right? That could shut down most other companies, but BlackRock is absolutely massive. So I don't know how much BlackRock had invested. The bigger the firms are, the less impactful it's going to be. When you have something like BlockFi, who had over $300 million invested in FTX, and that was all their money, now they're done, dead in the water. All right, let me show you economic calendar for tomorrow, and I'm going to wrap things up here. This is what the earnings look like for tomorrow. Viva Systems, Marvell Technologies, Ulta Beauty, Dollar General, and Kroger to round out your start to the month of December. We've got 11 months in the book and a mad dash going into the end of the year, and tomorrow is huge. There's so many announcements happening tomorrow. I had to split it into two separate economic calendars. Here's the first one, which shows Europe. A lot of stuff going on for Europe. We have manufacturing and services, just manufacturing PMI for Spain, Italy, France, Germany, and the EU. So anybody who's trading the euro could be impacted by some of these announcements here. The euro, for the past week or so has really been consolidating after a big run-up. Looks like a bullish flag pattern. And there's your euro. When I say bullish flag pattern, I'm basically saying you have a giant impulse move like this, and then you have consolidation like that, and not the best from a flag perspective. Well, it's snapping to the wrong bars, but something like that, where you have a big impulse move up and then it's traversing sideways. This looks actually rather positive for that euro, but some of this economic data could derail that real quick. A lot of manufacturing numbers coming out for euro. You also have the European unemployment rate and some bond auctions going on, but the big stuff, the heavy hitters, look how many announcements are happening for the U.S. I apologize if this is very small, but I'll read them to you. You have challenger job cuts. Core PCE price index is coming out 1 hour before the market opens. You have unemployment claims, personal income, and spending. All of that is happening 1 hour before the market opens. Oh, but wait. Now that the market opens, you've got an FOMC member speaking. 15 minutes in the trading session, you have the U.S. final manufacturing PMI. 30 minutes into the trading day, you got ISM manufacturing PMI, construction spending, and manufacturing prices. Then you got total vehicle sales, natural gas storage. FOMC member Barr will be speaking. I mean, it is an absolutely stacked day for announcements for the U.S. starting 1 hour before the markets open. And then down there at the bottom, Australia coming out with retail sales numbers. You've got monetary base for Japan and some central bankers from around the world, including Japan, the European Union, ECB, and Australia and New Zealand, all coming out with statements tomorrow, which my guess is will be very detailed as Jerome Powell's was today. All right. Liz says, so brilliant that he didn't even have an accountant and accidentally forgot to treat customer funds as liabilities on the balance sheets. How can he be so dumb? Because he was getting away with it and the money was flowing in. I mean, literally, the money was flying into that company. Tom Barr here works for the FOMC. He's going to be making an announcement. No. All right, that's going to do it for me, everybody. A little bit of a shorter show today. Sorry I didn't get to the cannabis thing. I'll do cannabis tomorrow because I'm not going to have Ryan Watkins on the program. We'll try to get to that next week. Friday, again, no show because I'm going to be doing a class over at UCI, so tomorrow will be my last show for the week. If you guys have something you want me to talk about or got questions, today's show was really driven by some listener, actually, it's driven by the FOMC, but I also appreciate, John, you sending in your comment about which storage device. I like the Ledger. You could use Exodus if you don't want to spend the money, or use a Trezor or a KeepKey. Those are the main ones. There's also one called, there's a new one out, but it's a card, like a credit card, but I don't really like that one. I think it's a bit too complicated to use, but Ledger or Exodus would be the way to go. So if you guys have something you want me to discuss, put it down below the YouTube channel. Any picture, any video, just go ahead and put your comments down below that one. Feedback, topic you want to go over for tomorrow, and I will do my best to accommodate for that one. You can also send me emails at TraderMerlin@gmail.com. That's it. I hope you have a great day tomorrow. Let's see if I'm right. Small gap up. Core PCE coming in line with expectations. Small gap up, hesitation, market sell. That's my call. We'll see if it comes through tomorrow. Take care, everybody.